James, you're up.
Ready?
One moment.
Oh, wait, no, a second. There you go, it's right.
Yes, sorry, couple things. And we're still, it's still going on yet, so. It's thinking about it.
Good morning. I'd like to call the meeting of the Albany Water Board Audit Committee to order. Today is Friday, July 25th, 2025, and the time is 8:34. Roll call. I'd like to go around the table, Mr. on YouTube, and everybody introduce themselves. Starting, my name is James Brazell, Chairman of Audit Committee. Starting to my left.
Joe Coffey, Water Commissioner.
Sarah Terrell, Human Resources Generalist.
Bill Simcoe, Deputy Commissioner.
Laura Golfo, Counsel.
Ariful Islam, Senior Accountant.
Chris Powers, Director of Fiscal Operations.
Anthony Owens, Board Member.
Joe DiGiovanni, Facilities Manager, Water Treatment Plant. Karen Wilkes, Executive Assistant.
Chuck Houghton, Chairman.
Rachel Johnson, Albany Water Board Member.
Okay, thank you. The next item on the agenda is approval of the minutes from the Audit Committee meeting held on September 27th, 2024. There are no objections. I will dispense with the reading of the minutes. Are there any objections? Hearing none, I make motion to approve the minutes as presented.
So move.
All those in favor? Aye. Opposed? Okay, the minutes are approved. Presentation of, the next item on the agenda is the presentation of the 2024 financial statements and in the audit report. We welcome Mr. Jeffrey N. Jones from the EDF PR Group, along with our Director of Fiscal Operations, Mr. Crystal Powers, to lead the presentation.
Okay.
Yeah, I think, hey, Jeff, we haven't actually met yet. Jeff has come in and to take the place of Tom Smith, who is our lead audit partner, and was with us this year and our first year last year, but he could not be here today. So Jeff has agreed to step in. Thank you very much in his place, and comes highly recommended from Tom. So without further ado, Jeff, go ahead.
Great. Well, thank you very much. And he says, very nice to meet you. It's nice to meet everyone. I do have a presentation, so I'm actually going to share my screen here in order to go through this with everyone. All right. And if you can let me know once it's up on your screen, then I will get started.
We got it. Thank
Okay.
you.
All right, so I'll roll right into it. As mentioned, today we're going to be going through the results of the financial audit for the year ended December 31st, 2024. Our audit team out there was comprised of Tom Smith, who was engagement partner, Ethan Yoder was our engagement staff, and then Rob Williams was our technical review partner. Something that we do here is on every engagement, we have a technical review partner, which is essentially another partner within our firm who has no involvement in the audit itself. Will come in at the end and do a more of a high level technical review, meaning, a lot of times when you're performing an audit yourself, you might understand where a number is coming from. If you're maintaining the books, you understand how everything is operating, you understand where everything is coming from and going. But we like to have a third party kind of come in and review it with fresh eyes, just so that we know that a user who, isn't really involved in day-to-day operations can still understand the report. So Rob Williams served in that role for us on your engagement. For our timing of procedures, test work started on June 2nd. We were able to then issue the draft July 23rd, and then today we'll be reviewing and approving the final reports with you. So we do expect to issue unmodified opinions on the financial statements and the investment report. An unmodified opinion is actually the best opinion you can receive. It means there is no material modifications to any of the numbers, our initial planning procedures, or the actual reports and numbers themselves. We always like to note when we can is that all records information that we requested were available. Anytime any member of the team needed something, Chris and the team there was able to get us everything very timely, which we greatly appreciate. We did have to disclose one instance of a material weakness in internal control and one item of non-compliance that's required to be reported under government auditing standards. Those two items I'll cover in the next two slides here with you. So the material weakness was in regards to significant audit adjustments. These are items that have already been gone through with management. They're just items that we were used to reconcile some of the numbers for the financial statements. A total of 7 adjustments were made. We recommend just making sure that at the end of the year, any significant asset and liability accounts are fully reconciled, ensure that all proper documentation is obtained at the end of the year, just to make sure all the numbers look good. The next one for your non-compliance is in regards to your Paris filing. Each year, Paris requires you to submit your report within 90 days of year end. Obviously, we were past that. That would have been March 31st. The big thing that we noticed here is a lot of that is due to the city's involvement with some of the year-end closing and the year-end reconciliations. As a result, we're going to recommend that you kind of work with the city in order to maybe get some of those accounts on a more timely basis. That way you can be sure to really start hitting those deadlines going forward. Management letter comments. These are items that are more of a recommendation. They don't elevate to the level of being a finding or a material weakness or anything like that. They're just a best practice and something we really recommend that you work on going forward, or maybe something to kind of take a look at in the future. This year there is one comment, and it's new for this year, and it was in regards to the transactions with the city. A lot of the administrative fees that the city pulls out, there's no real support for it. You don't actually receive any type of invoice or maybe something that itemizes what they're pulling out for. And as a result, there is not sufficient support to understand really what those expenses are related to. So it's something we would recommend that you work with the city in order to, when they end up draw any of those funds, that you know exactly what it's for. Simply something like an itemized invoice, an itemized receipt, just so you know exactly what it is you're paying for, just so between reconciling items on your statement of activities, making sure we have all the expenses classified maybe a little bit differently depending on what it's for, and also just so you know what you're paying for. Last year, we did have a comment in regards to your line of credit where there was delays in getting any information in regards to your line of credit, whether it be statements, and then you also had some difficulties in getting access to the account itself, figuring out the balances, figuring out how much was left over, and those kind of issues can lead to cash flow delays. And so we had recommended kind of taking a look into that. And this year we were able to get the credit statement fairly easily. And so as a result, we are happy to say that we're going to be removing the comment and we are considering it resolved. Additionally, last year we had a comment about your journal entry review. We noted that there wasn't a lot of segregation of duties when it came to the authorizing, posting, and then reviewing of journal entries. Some stuff was just kind of held too tightly by only one position, which is slightly a breakdown of controls. So we recommended implementing additional controls, and again, we're happy to report that you did so. And now there's a new policy in place. There's some segregation of those duties, so the authorization, posting, and reviewing have really been spread out a little bit more. So again, happy to say that that comment is also resolved. The last comment from last year was in regards to your suspense account. So a suspense account is sometimes a dumping ground of accounts and also sometimes called a clearing account, where it's mainly the offset of some journal entries that go through or offset of some transactions. Historically, suspense accounts and clearing accounts will usually net down to zero as the activity flows through. But the problem is a lot of times it's hard to track all the activity or to be sure that all the activity goes into the right account in the right area in your financial statements with using these types of accounts. So we had a comment last year about either stopping using it or just do something else in order to be able to ensure that everything is being tracked and reported properly. And we did note that it was not used in the current year. Everything was reported to where it needed to be. So this comment is also considered resolved and cleared. So from here, I'm gonna move into your actual financial results. Your current assets increased about 3.5 million, now to a balance of a little over $28 million, mainly as a result of the amount that was due from the city of Albany. So last year that was liability. This year, with operations and timing, that actually is now flipped up into an asset for you. Your non-current assets ended up increasing a little over $2 million, now to a balance of 160 million. That's mainly just due to capital asset additions this year, and those exceeded any type of disposals or depreciation expense. Then we saw your total liabilities increased a little under 600,000, now to $112 million. The largest swings that we saw there was an increase in accounts payable of 1.2 million. And accounts payable is expected to vary from year to year. It's just the timing of disbursements, timing of invoices received. As we all know, sometimes work is done in November, December, but you might not get the invoice for a month or two. And so as a result, that's nothing that you guys actually did one way or the other. It's just a timing difference. In addition to that, there was a decrease in the line of credit of about $2 million. Next, we go into your net position. Now, net position is broken up into 3 different buckets. We have our net investment in capital assets, which is essentially all your capital assets, your buildings, your infrastructure, minus any type of liabilities such as debt that's used to finance those capital assets. The second bucket is any restricted net position that you have, and the third bucket of unrestricted is basically everything else that's left over. So it's not already designated into a specific bucket. So overall, we saw a net position increasing a little over $5 million, now to 75.6 million. Your net investment in capital assets increased about 8.6 million, now up to just under $48 million. And just like I mentioned on the previous page, that's a lot due to those capital asset additions, and those exceeded any type of disposals or depreciation expense. Your restricted net position decreased almost $5 million, and that's just due to a decrease in your restricted investments. And then the final bucket of unrestricted net position, that increased about $1.4 million, now to a balance of 14.8 million. So as you roll into your operating revenue, we see that you increased almost $1 million up to a little over $38 million this year. It's mainly due to the increase in rates being charged. Your operating expenses increased a little over $2 million, now to just under 39 million. That's mainly due to the water transmission, distribution expenses, those increasing about 800,000, as well as your depreciation expense increasing. Now, as you get more capital assets, there's more items to depreciate, so depreciation expense is expected to increase. So nothing there is really outside of expectations. Your non-operating revenue and expense, that ended up increasing about 5.2 million, now to 5.8 million. Or sorry, increased 5.2 to 5.8, mainly due to the increase in capital grants of 1.6 million, as well as capital contributions of just over 4 million, or just under $4 million. And just as far as those capital contributions within your financial statements, there is a full footnote about it. It's footnote 10, so it's pages 33 and 34. If there's any more specific detail you wanted to take a look at in regards to that. Next thing to go through is the report to the board. We note that your significant accounting practices were all described in note 1. Accounting estimates, we took a look at all of those, both in the current year as well as a retrospective review. We noted everything appeared reasonable and supported. Any of the financial statement disclosures were all neutral, consistent, and clear. We had no difficulties in performing the audit, no disagreements with management over anything, whether it be accounting, reporting, or anything else in regards to the audit. Once approved, we'll obtain a management representation letter to release the financial statements and be finalized. No significant changes to our planned audit strategy, and any significant risks that we identified at the beginning remained consistent. There are no matters noted relevant to audit that we felt need to be brought up outside of what I've already disclosed and discussed with you previously in the presentation. We aren't aware of any consultations with other, whether it be CPA firms or other accountants in regards to any accounting or auditing matters. We had no disagreements with management in regards to anything that we did for the audit, whether it be adjustments or the type of audit opinion we are issuing. And there's no other matters we consider significant that would need to be communicated. The last section here is about upcoming GASB pronouncements. So GASB has been issuing statements constantly over the years, and each time there's a impact on every end user. So it could be something significant, could be something small. So we always like to take a look at what's coming up. Our firm will go through, read the GASB pronouncements, make sure we understand them, and then we'll talk with management, make sure that your policies or your financial statement presentation really conform with everything that's coming up. If a change is coming, that's something we'll always discuss before the audit actually even begins, and especially before we issue any financial statements, just to make sure that we're always on the same page and there's no surprises going the audit. So the next one coming up is going to be GASB 102 in regards to certain risk disclosures. You're already pretty well off in regards to those, but it's still something that we are going to take a look at before we issue next year's audit. It's just making sure that in the actual footnotes to your financial statements that you hit everything that's required. Whether it be a few additional disclosures in there or it might be something as simple as adding a few sentences. But again, that's something we'll be working with management on prior to next year's audit. The next one is GASB 103, which is your financial reporting model improvements. This is something where the GASB came out and said a lot of entities, MD&As and other areas didn't really give enough information. They might have just said, here's this year's number, here's last year's number, and they moved on with their day. They wanted a lot more of the why something changed. So, similar how I just mentioned how, let's say your operating revenue increased due to rate increases, something along those lines. They just wanted more information to be included in there just to help the financial statement user really understand what's going on and basically describe in words what these numbers are doing. Including also there's a comparison for the budget schedules as well as making sure the presentation of operating, non-operating revenue expenses and all those items are more uniform. There's been a little bit of, I guess, variance between some of the entities out there. So if you look at one public authority to another, they just want to make sure that they all look the same so that one end user can look at two different public authorities, for example, and really look like they're comparing apples to apples in this case. The last one there is GASB 104, disclosure of certain capital assets. This is something that you're already doing, and there's not really going to be any impact at all. It's basically ensuring that all of your capital assets are properly broken out, properly disclosed. For example, we note here how any leases or right to use assets need to be fully broken out in your capital asset footnote. That's something you're already doing. We already have it listed out as a right to use asset, for example, in the footnote. So there's no impact that we see in regards to 104 when, I mean, it is 2 years away, but it's still something that is not going to have any type of real significant impact or work that's going to be required on your part. Then the effects of, we always like to say the full effect of the statements is currently unknown because again, I said prior to the audit, we'll work with you, go through your policies and procedures to make sure that everything is actually in there. So we aren't going to say that we know the full extent yet until we really go through everything. But again, the year that they are required to be implemented is the year that we'll be going through it all with you and we'll be helping you through it. So it isn't anything that we see that's going to have too material of an impact on you. And that was the presentation. So from there, I'd like to see if there's any questions on that.
A lot better than last year.
Amen.
I have no questions on the presentation. Thank you very much. But I have one question on the draft report.
Okay.
On, it was towards maybe page 28-30. Seemed like there were two debt principal payment schedules. And they were both titled like Schedule E and Section E. One was very different than the other, so I was just wondering which one was going to be the final.
Which one? Yeah. You want to mark it off?
Yeah,
Okay.
yeah.
Take a quick look here.
A, B, okay, so page 30 and 31. think I was just confused by that. Maybe it was my misunderstanding when I read.
Oh,
this.
so the first schedule there is it's the only difference you'll notice is actually in the first two words of the sentence there. One says future principal payments, and then the next schedule says future interest payments. So what it's
Yeah.
that's why all the bond names are exactly the same on both schedules, so it looks like it's duplication. But yeah, the first one is upcoming principal payments, the next one is upcoming interest payments.
Thank you.
Yeah, it's a lot of detail there. It's the same name, different numbers. I got you. Okay, yeah.
Question is today the official date of the audit completion?
If it is approved today, then today will be the official day. What we'll end up doing is I'll be sending over to Chris, as I mentioned, that management representation letter. It's essentially just a letter that says that you are all approving of the financial statements and we are good to finalize them. And we like to have them dated the day that you will then be approving and accepting the reports. So if they are approved today, today will be the official date of the reports.
As far as Paris goes, yes, we're getting closer to the actual requirement. What they require, do you foresee anything that in the future that will bring us closer to that actual requirement date?
Yeah, I mean, a lot of that's going to probably still have to do with making sure you can get everything from the city in a timely manner. Again, like you said, the Paris filing is the 90-day deadline. And if you're not receiving all the information you need to close the books and finalize until after 90 days, then it's not an option for you until that's resolved. So that's why it's something, we just recommend talking with the city, making sure you can get everything from them. And that's again why we like to put in there that you need to get stuff from the city. We're not blaming you in any way. And that's all, but that's kind of our recommendation is just working with them, seeing if you're able to get that information in more timely manners. That way you can be done and get wrapped up by your deadlines.
Who audits the city? Who does the city's audit?
Not
They are what I think it's UHY, right?
Possibly. I don't know that off the top of my head. I'm sorry. I'd have to look it up.
Do you collaborate with them at all?
So
On
we
their audit?
send confirmation statements to various other municipalities just because there are amounts with you, but that would be really the extent that we're requesting that information from them. We don't work with them on a basis that like helps them close their books or move their books along in a faster statement, on a faster timeline in any way.
And James, I think what we can do is the Paris requires that we have an audited financial statement. So it all has to be done virtually if possible. We can do other schedules in Paris that we can do that take a tremendous amount of time that we can get ahead of. That we can, once we finally get that report, we can just pop it in and be done. So we're gonna be a serious talk with the city to, maybe we can make some estimates to close our accounts or something to that nature. We can actually just close our books, do our own report. And then if there has to be an adjustment at some point, maybe later on, that's okay. That's the only way I see this happening. Well, what we've been doing so far is getting ahead of the numerous schedules that take a lot of time so that we're ready to go and not just, we're literally just waiting on that report. So that's kind of where we're at on that.
Bill, do you have any comments on the report? Satisfactory to you?
Yeah, I do. You want me to
Yes.
get into that now?
Yeah.
So from my perspective, one of the most important, and can everyone hear me?
Yes.
Okay. One of the most important results of the audit, from my perspective, is computing and understanding the debt coverage ratio. And the importance of that is that the board and the authority have made a commitment that the debt coverage ratio will be above 1.15 to 1. Effectively, what that means is that for every dollar of debt service, we will have $1.15 of available cash. It's more complicated than that, but that's the real test. It's tough to sell bonds if you're not in that range. And you all might recall that at the end of the year in December, we go through a budget for the board and the authority. And the purpose of doing that is the board has to present a budget that is at least 1.15 to 1 on the bottom line. If that is not done, the authority has the ability to require the board to increase revenue somehow or cut expenses to be within that 1.15 to 1. So while we've never had any kind of what's called a technical default, I'll just tell you what it's been in the past few years. So for the year ended December 31st, 2021, the debt coverage ratio was about 1.3 to 1. Clearly over 1.15 to 1, but not a lot of cushion. In December 31st, 22, and that was after the refunding. So that gave us a little kick, a positive kick. That number was 1.9 to 1, a very, very good debt coverage ratio. Last year, the computed number, this is for December 31st, 23, that number was about 1.8 to 1. And on a preliminary basis, and I have to verify this, but my back of the napkin computation for this year, meaning December 31st, 24, is 1.7 to 1. So we've slipped a little, but not significantly. And what that suggests is that, and we've talked about this before, there are really only two things that drive increased rates, and that is a debt coverage ratio that's going to be a problem or running out of cash. And although our debt coverage ratio has slipped a bit and cash continues to decline, but slowly, that's a factor that we all have to talk about in connection with what's going to happen as far as rate increases are concerned. So that's my primary comment. And I think understanding the debt coverage ratio is an important part of what's done later in the year with respect to rates.
Chris, do you have any comments?
Nothing overall, you know, we did this yesterday with Tom. Chuck brought up a point when I walked in, and after reading the management letter comments, and they reminded me, I was an auditor at one point, that we had an official ability to respond to those auditors' comments in writing. Just either give an explanation or tell us what we're going to do in the future. Is that Jeffrey? Is that something that you've experienced, or is that something that we could do?
Yeah, so basically in regards to the two findings, right? So in there, we do have a management response section. So if there is something that, if you take a look at the draft, there will be a piece in there where a lot of times will basically place in a generic response in there, and then, but it will cover everything that is actually required. And then if there's anything you want to add on, you can talk with us about it and we can kind of tinker it to be more your true language if there's something you want in regards to those. I know that the findings themselves don't really stress on the debt items that Bill just talked about. Obviously
Right.
the findings are more in regards to, the 90 days and whatnot. But then also I know more of them follow up even on, Bill's comment is, your receivables themselves, you're talking about cash going up. You have over $15 million in receivables. So the fact that once that comes up, even though if you're looking at purely cashing compared to debt service requirements, you're absolutely correct. But if you take a look at those funds coming in, your actual liquidity, there is going to be ideally a lot more coming up. So again, that's why we wouldn't consider that anything as far as a comment or finding in your financial statements, only because from a liquidity purpose, the funds are there and the funds should be coming.
Right. Okay. Yeah, I mean, just quickly, I mean, 2020, the audit for 23, if you said we had 7 adjusting entries for 24, we probably had 40 for the very
Right,
first
exactly.
year. So it's evolved into something smaller. Certain accounts, we didn't totally finalize. We needed guidance from the auditor. So I don't think it's ever going to be a sense where we're never going to have any adjusting journal entries.
Right.
But that's sort of the evolution of kind of what we're being in our second year, being a little more experienced. And that said, I think as things go along a little further, we'll have more of a proper close. We basically operate on a cash basis for the majority of the year. We have to convert to accrual. We can do some of those journal entries to get that out of the way, but there's always going to be some that we're going to not be able to finish or need guidance on before we send out our trial balance to you guys. So that's the gist of the response. I'll try to be a little more eloquent than that, but that's kind of what happened.
Yeah, and absolutely. I mean, the fact that you said we dropped down to only 7 journal entries is a huge step. And then also even taking a look at, I mean, last year there was 3 management letter comments. Now you're down to only 1, right? So everything shows significant improvement. Everything shows, everything is on the right track and, trending well. So yeah, if there's something you'd like to add in though, as far as your response for the findings, we can kind of circle back to that and take a look at it. That won't be a problem at all. I mean, I can even take a look at it, and if you wanted to give me a call today, and we can take a look through the wording together and see if there's something else you wanted to add or amend there.
I think a
And
short blurb would warrant that. I'll give you a call after the meeting.
perfect.
Sure. Thanks.
Okay, thank you, Mr. Jones, Bill Kahn, and Mr. Powers. Are there any questions or comments further from the committee meeting? Okay. Is there no further questions? May I have a motion to accept the 2024 financial statements and independent audit report as presented?
So moved.
Okay. Those in favor?
Aye.
Opposed? Motion carries. The 2024 financial statements and audit report are accepted by the audit committee. This item will be presented as a resolution for consideration by the full board of the upcoming regular meeting. You now the floor for any new business. Any items for discussion? Seeing that there is no new business, we will proceed. If there is not a reason to enter executive session, we will proceed. The date of the next audit committee meeting is to be determined. We will notify the public office once it has been scheduled. If there is no further business, I will entertain a motion to adjourn.
So moved.
Okay. All those in favor?
Aye.
Opposed? Okay. Thank you. Thank you all.
Thank you.
Thank you for your time.